In today's video, I'll break down one of the most powerful concepts that I ever used in my trading career. It is something that I have been actually testing for years, and it finally made me profitable after I truly understood it after years of failing in the market. It's extremely powerful and reliable, and that's how I'm gonna break it down from A to Z step by step, so by the end of this video you can use it immediately. So before we dive deeper into the concept and whole strategy about it, first I want to show you my profits with using it. So you can see average win to loss ratio, and my average win rate is about 80%. Almost every single month in a whole year I will end up green because I only wait for the best setups. As you can see, I don't take a trade every single day. Sometimes also I lose, but I always wait for those best opportunities in the market. That's why I'm able to be consistently profitable in the market, because in trading quality always beats quantity. So for this strategy we are gonna have only 3 simple steps that we need to follow in order to execute a trade. So step number 1, it's gonna be mark highs and lows on higher time frame. You can choose, it can be 15 minutes, it can be 1 hour, it can be 4 hour, maybe for you it can be also 5 minutes, but the thing is you need to choose something that works the best for you. I like the most 50 minutes and 1 hour. Then step number 2, it's gonna be wait for manipulation on one side, aka sweep of liquidity. So let's say this is price section over here, and the highest highs and the lowest low, it's gonna be this high, and the lowest low, it's gonna be this low. And here price took out this high, which means price manipulated above these highs and swept all this liquidity, which was buy side liquidity resting. And now what price is most likely gonna do, it's gonna reverse, and we're gonna hunt the opposite, which is sell side liquidity. And that is essentially what this strategy is all about. So once manipulation happens, you are waiting for confirmation on the lower time frame and you enter a trade. And the last step, it's gonna be execute trade and manage position, which means where to put stop loss and where to put take profit. So let's start with the step number 1, which is gonna be mark key levels. So as you can see over here, price is not making hard highs, hard lows or whatsoever. Here market is just consolidating and ranging, which means market is generating liquidity. So the highest high of this whole entire range is this high, and the lowest low is this low over here. But you can see everything in the middle is just noise, and most likely if you enter a trade in the middle before sweep of the main liquidity, you are gonna get stuck in the chop, or even worse, you are gonna lose. So we just simply waiting for sweep and manipulation on either one side or the other side, you can be ahead of 99% of traders. And also when market is moving, we are either generating liquidity, which we are doing here on this picture, or market is hunting liquidity. Those are only 2 scenarios. So once you have marked out your levels, we have step number 2, which is going to be wait for manipulation on one side, aka liquidity sweep, and as you can see, that is exactly what happened. So you really need to pay attention to this, because we have 2 main mistakes that traders don't see. So first of all, they see this as a break of structure, and they think that market broke this structure and that we are going to continue with a bullish trend. So we are going to have some sort of retracement and then continue with a push to the upside, breaking new structures. That is first mistake, because while market was going to the upside, market left many lows. So we have this low, we have this low, we have this low, we have this, and at the end we have this main low. And all these lows are just liquidity resting from early buyers, which means their stop loss is here, their stop loss is here, 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 and here. And what is stop loss? Stop loss is money in the market, which means market is gonna hunt that money to collect it. So what we're gonna do instead, we are not gonna see this as a break of structure whatsoever. We're gonna see this as a full sweep of buy side liquidity. There is nothing resting anymore, so this is the final high, which means most likely in a 90% of situations we are gonna hunt the opposite liquidity. So you can see it doesn't matter which strategy you are trading. Maybe you are trading support resistance and you see this as a support zone. Maybe you see this as a bullish fair value gap and you enter from that gap. Maybe you see this as a demand zone and you enter from the demand zone. It really doesn't matter, because whatever you're using, you are still gonna lose, because this is not the right approach to the market. So for the final step, which is gonna be executing trade management, this is where most traders get it wrong, which is the exact reason why they lose in the markets. So what we're gonna do different, we know that this is not a break of structure, this is not continuation of the trend or whatsoever. We are gonna see this as a manipulation and sweep of liquidity, and we know that right now market needs to hunt new liquidity, which is going to be the opposite liquidity. So what we are going to do, we're going to pay attention to the actual fair value gaps. You can see we have bullish fair value gap. If bullish fair value gap holds the price, that most likely means that market is going to respect it and continue the move to the upside. But over here you can see market clearly disrespected bullish fair value gap, which is the first confirmation and actually the best confirmation that market is moving to the opposite direction. And same goes here. This was the lowest low. We have the sweep of that lowest low, and look what happened with a bearish fair value gap. It perfectly got disrespected and inversed, and guess what? Market made a move to the upside. And also after this inversion, we have this bullish fair value gap, which was perfectly retested, and only because this was respected, market made a push to the upside to take this liquidity. So essentially, fair value gaps are gonna tell you the whole story if you know how to read liquidity. And at the end, you can see how fast, without any drawdown, this trade played out towards the take profit, because this is how the market really moves. So right now, once you know how to use this concept and how this whole strategy is actually working, we're gonna go in trading view, and I'm gonna show you some real examples that I actually took live. Okay, so for the first example, I chose from my hard time frame 50 minute because it's looking the best at this moment. So what I'm gonna do, I'm gonna mark out the most meaningful highs, which is gonna be this high and let's say this final high, and the most meaningful lows are gonna be these equal lows and this intermediate low over here. So right now I have my levels marked out, but the only thing that we need to do, we need to wait for 9:30 AM Eastern time to hit, because that is when New York AM session opens, when most volume kicks in and where real money moves. So we are only gonna trade New York AM session. So if I play the price for just 15 minutes, you can see that first high was hit, which means I'm gonna go to lower time frame to see what's actually happening. And as you can see, not only that we hit this high and we took out all this liquidity that was resting here, but we are also delivering from the bearish fair value gap. You can see this is bearish fair value gap, you can see this is bullish fair value gap, and bullish one got perfectly inversed and bearish one is getting perfectly respected, which is already telling me that most likely if I get confirmation on the lower time frame, I'm gonna see some shorts. So we have the main sweep, we have also one more manipulation, which is the final sweep of liquidity. So what I'm gonna do, I'm gonna go to the lower time frame, let's say 1 minute, and I'm gonna mark out the first fair value gap in this move, which is gonna be this one and actually also this tiny one. So this is gonna be my best confirmation, because if we retrace here and respect this fair value gap and continue with a push, that means that main drawn liquidity, it's gonna be this high. But if we just break through these fair value gaps, that means that we are not bullish anymore. And as you can see, is this looking bullish to you? Of course it's not, because with the great displacement we closed underneath all these fair value gaps, which means I'm gonna take my trade and I'm gonna put my stop loss above these fair value gaps, and I'm gonna simply target this intermediate low, or maybe if you want you can also target this final low. But for me this is more than enough to target. And as you can see, this is how it played out without any drawdown. We had some small retracement to this bearish fair value gap, but nothing crazy, and then instant push to the downside. And that is usually what happens. Your winners are gonna be really fast because you are aligned with the market. And also at the end you can see that the final take profit was hit, and also we just retraced to this bearish fair value gap to launch the price lower, and this is how it looks like. So right now I'm gonna show you also one bullish example. So looking at this, you can see that I chose 1 hour time frame for my hard time frame, because you can see the main key liquidity zone, which is gonna be this low, and let's say for the buy side liquidity we are gonna mark out this high. So we can also scale back to the 15 minutes, but you can still see the same thing. This is the most meaningful low and this is the most meaningful high. And also this most meaningful low is supported by the bullish fair value gap, and also the bearish gap was inversed, which means if we sweep this low, which is sell side liquidity, and we respect this bullish fair value gap, we are probably gonna see higher price action. So you can see this was the 9:30 market open, but nothing actually happened. We are still waiting for this main drawn liquidity to be hit. and as you can see, here is exactly what happened. This is around 11:15, but you can trade your cam session from 9:30 am Eastern time till 11, or you can extend it, of course, if price action is efficient, for the last lunch macro. So that's what I'm gonna do here, because trade is very clean. I'm gonna trade one more hour and I'm gonna scale back. Let's say you can see on 5 minute over here, we inversed all of the gaps, which is the first and the best confirmation that we want to continue with the bullish trend. But I just want to see on the lower time frame what's happening. You can also see 3 minute was inversed, and on the 2 minutes you can also see everything was inversed, and probably if I go on 1 minute, yeah, like I thought, 1 minute is also inversed. So every single time frame is clearly inversed right now, but the most efficient and one that is looking the best, it's gonna be 2 minutes time frame. So I'm gonna choose 2 minutes. So I'm gonna place my trade after the 2 minutes closure, and I'm gonna place my stop loss underneath the last candle low. And right now I'm gonna target, let's say we can target this high for 1 to 2, or final take profit, which is gonna be the buy side liquidity. So only because I don't like to target anything more above 1 to 2 risk to reward, because I just think it's not sustainable, I'm gonna target 1 to 2 here, but you can of course leave a runner towards the last take profit. So I'm gonna place my take profit here, and if we play the price, and here we go. First we started to chop for a little bit, but that's completely fine, because you can see this bullish fair value gap was supporting the price, and then if you were patient, take profit was hit, and probably if we play the price, the last take profit, it's gonna get hit, but I personally don't care. You can see price is edging here, because 1 to 2 in one session is more than enough for me. So the first step of the actual strategy was to mark out meaningful highs and meaningful lows in the market. Then you are just waiting for one side to be swept, taken out, or manipulated. You can call it whatever you want. And then you just scale to the lower time frame, and you are waiting for those inversion of the gaps to confirm you the whole move, and you enter a trade like this, and that's all you need to know. So that's gonna be it for this video. I hope that you liked my approach and my strategy. If you do, smash that subscribe, and I'm gonna see you in the next one. Peace.